Welcome to another video. Today, what I will be showing you is exactly how you're supposed to be approaching the market from a technical and order flow perspective by performing a full live breakdown. And I will also show you on the pair that we will analyze exactly where is the best area to be looking for a potential trading opportunity this week. Now, if you're new to the channel, I'm a top author on the TradingView platform and I share free education and analysis on all my platforms daily, so I suggest you subscribe to the channel for more free education and analysis, and I will see you in the video. Okay, so what kind of situation do we currently have on EURJPY? That is exactly what I want to speak about in this video, because the last time that we spoke about this pair, we had a situation where the market still hadn't created the manipulation that it just created. So I want to show you where you can be looking for a very high probability trading opportunity with the current situation that the market has now created. So let's make a full breakdown of the pair from the monthly to the 4-hour time frame, and as usual I will try to keep the analysis as educational as possible, and by the end of the video you will see exactly and you will understand exactly where you can be looking for a potential trading opportunity. So let's start from the monthly time frame. Now on the monthly, clearly we have a market that has created this double bottom. Now after the market created this double bottom on the monthly, the market rejected its zone aggressively, and with the last monthly candle, we can see that the market has created this huge wick. Now, when you see a market that creates a wick like the one that we see here, what we actually expect is the next candle to fill in that wick. Why? Because this wick on lower time frames, aka for example the weekly time frame, will simply be a retracement. And as you know, in the market, after an impulse and a correction, you want to see the continuation to the upside. So impulse, retracement, and you want to see another impulse to the upside. So this wick on lower time frames will simply be a retracement, and we can definitely expect the market to continue with the move to the upside. Now let's go down on the weekly time frame and see what kind of situation we currently have from a weekly perspective. Now on the weekly, we can see that the market has created this strong impulse to the upside that we see here, and after that the market created the retracement, and this retracement is exactly the wick that we were speaking about on the monthly time frame. So this retracement is the wick itself. Now, if we want to measure this retracement, what are we supposed to be doing? Taking our Fibonacci from the low to the high of the impulse, right? And by doing this, what we are seeing, we can clearly see that the market retraced exactly to the 50% of the Fibonacci taken on the impulse, meaning that we have a 50% retracement of the impulse move before the market is basically tried to start a new move to the upside and is currently moving to the upside. Another very important thing that we can see is that the market has been moving by steps, which is exactly what we expect after an impulse and a correction. What do I mean by moving in steps? First of all, the market retraced exactly to the 50%. Then it broke back up and it retraced exactly to the 0.382. And now the market is continuing to the upside. Just a quick reminder, make sure you comment below and you let me know which topic or pair you would like me to cover or analyze in the next video. So just to clear up this concept, the point is that if you have an impulse in the market, okay, and you take the Fibonacci on the impulse leg, and the market, let's say, makes a retracement to the 0.618, then what you expect is the market to make the next break and retest at the 50%, and then the next one at the 0.382 before continuing to the upside to the overall upside target. That is what you expect. And that is what is happening here, right? Is exactly what is happening. If we take a Fibonacci from the low to the high, first retracement to the 50%, then break back above the 0.382, retest of the 0.382 before the continuation to the upside. So same concept. Now let's go down on the daily time frame and see what kind of situation the market is currently creating from a daily perspective, because on the monthly, just to quickly recap what we have, double bottom, and we have the candle that we expect the next one to fill in the wick, and I also made a YouTube video about it. On the weekly, we have the impulse, correction, and the continuation to the upside, which has been moving by steps following the Fibonacci levels. And on the daily time frame, we still have to see what we have and how the market has been creating the manipulation that I want to speak about today. So basically, this is the manipulation, okay? And this happens over and over and over again because it's the way the market actually moves. Because keep in mind, okay, why do we even look at the COT data? So the commitment of traders, what the biggest banks and institutions are doing in the market. Why do we follow their orders? Because by looking at what they do in the long term, we can gain an edge in the market. But the point is that the only reason for which we are able to look at their long-term shifting of their orders is because it takes so much time for them to actually shift their orders, because they have too much money to actually trade. And that is the exact same reason for which here the market makers needed to create this manipulation, because they don't have the liquidity in the market to actually fill in their orders. They have orders so big that they need to create the liquidity to actually fill them. And that is why we have manipulations. For example, here what happened. As you know, most people that were taking the longs for the continuation to the upside had their stop losses below the low. That is what you read on all trading books. Your stop loss needs to be below the low. Now in this case, the low was here. So many people had their stop losses all below this area. And as you can see today, the market went, on Friday, the market went to hunt all the stop losses below this low and then started this huge move to the upside. That is basically the basic manipulation that most of the times the market creates, okay? Hunting all the stop losses and then starting the move to the upside very explosively, okay? So creating a strong move. But at the same time, after these strong moves, usually we will get a retracement, and it's great to wait for these moves and expect them, because after them there is the possibility to be looking for a good trading opportunity, because the stop losses have already been cleared out and the big boys have already entered the market, because at that point they do have the liquidity to actually take their longs. And keep in mind that many people also started to short from here. So there was both the liquidity from the shorting and from the stop losses getting hunted that gave them the possibility to actually buy aggressively. Now, if we go and see what we have currently from a COT perspective on the euro and on the JPY, what we can see now from a euro perspective, we can see that we went from minus 114k net positions, so way more shorts than longs, with 271k shorts and 157k longs, to a situation where we have way more longs than shorts, with 190k longs and 72k shorts. And if we look at the more short term, we went from a 118 to 98 back up to 103, with 4.7k longs added with the last report alone. So a lot of longs getting added on the euro, which is definitely good for our overall bullish outlook on EURJPY. And if we check JPY, we can see that we went from minus 56k net positions all the way up to 34k net positions. So definitely increasing the strength. However, in the short term, you can see that we went all the way back down to 16k. So a clear increase in the shorts, which is very good for our overall long view for EURJPY. Now, if you're not already in the trade, so if you didn't take advantage of this manipulation to actually buy, what are you supposed to be doing? Where is the next opportunity? Now, very important to keep in mind that this high here still hasn't broken to the upside, okay? So this level here is still acting as resistance. To be broken, we need to see a clear daily close above the area, which we still didn't see. So how we will be approaching this? Now, keep in mind, if this is resistance and it hasn't broken yet, you can't be looking for the long from here. Either you long from here and now you're already risk-free, or you can't long at resistance because it's obviously too risky. So how are you supposed to be approaching it? Now, if the market will break this zone to the upside, no matter if you already longed or if you want to compound your long trade, if the market will break this zone to the upside, then all this previous resistance here, okay, will be turned support at this area. So what are you supposed to be doing after the market breaks on the retracement back to the area? We can be looking, and we will be looking with students on the 4-hour time frame, obviously as usual being reactive and not predictive, because trading is reactive, not predictive. So we will be waiting on the 4-hour time frame after the break and retracement inside of this area. We will be waiting for the market to provide to us one of our valid entries. And if the market will provide to us one of our valid entries inside of this area, then we will be looking for a very good probability risk to reward trade to the upside, minimum 1 to 3 risk to reward to the upside for a very, very good trades. But first, we need to see the break to the upside, which at the moment we still didn't see because this daily candle hasn't closed yet. And anyway, it hasn't broken the zone even if it closes right now. And then we need to see a retracement back in the area and proper confirmations on the 4 hours. Obviously, always following the rules and being patient if you have a clear rule-based strategy. That is why I always stress that you need a clear rule-based strategy when you're trading. Otherwise, you will be trading with emotions, which is never, ever, ever a good idea. If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free analysis and education for all of you. Also, make sure you go and check out the mentorship program. It's a very complete program. You first learn all the rules of my rule-based strategies, and then you trade them live with me each and every day. In fact, I give you a new daily market breakdown showing you exactly how to apply these strategies with the entry, stop, and take profit, as well as answering every single question that you have every day. So I really suggest that you go and check it out, or you can go and check out the next video.